Are we building up leverage?
We are building up leverage.
In a significant way?
In parts of the market, we are. You see that on some of the in some of the hedge fund space, and that is a bit worrying because we saw something similar back in '07 when you had a lot of leverage. And again, if you remember back then, what also distinguished that period, the VIX was at 10, and we had all the stories where the VIX would always be at 10 and volatility was dead. Clearly, it came back, and when it does come back, and you see these crowded trades with leverage, that can produce some violent reversals.
So which assets are the most highly levered, and are you talking about hedge funds actually borrowing short-term to invest long-term?
Well, you're talking about hedge funds borrowing. Now, again, their time horizon will obviously depend on the hedge fund. I think where you're seeing a lot of that leverage, you're seeing it in credit markets, you're seeing it in equity markets, particularly here in the United States.
So which, within credit, so in other words, does that mean that you think that high yield potentially could be the first to fall and fall precipitously if something occurs to squeeze this leverage out? You know,
that's not clear, but it's an interesting question. And the reason I say it's not clear is I don't want to fight the same battle as happened the last time. You know, in '16, when the wheels started to come off in January, it was the high yield market. We're seeing a lot more resilience now. Part of that is because the energy is not as large a part of that market. The energy issue is in that market to become more resilient, but also because we're still in a world where financing is very easy and very cheap. That probably has to start to change until you're going to see too many cracks in high yield. And honestly, one of the reasons I think equities have done as well as they have and volatility is as low as it is because high yield and the credit markets have held up until now.
Your PR team's going to have a nightmare with the following question, so ask you to turn the volume down.
Have to avoid
so you should brace yourself as well. What you're saying seems to be quite different to what I've got from the house view of BlackRock over the last few weeks on this program. In fact, many of the guys from BlackRock have joined this program and said that their takeaway is that people are underinvested. They're under-risked. Yep. Sort of put what you're saying together with that for me.
Those are not mutually exclusive.
Okay, please.
They're totally on line. On point,
on board with the house view.
Right, yes.
Well, I'm not sure about that, but yeah, BlackRock has many views in the House, as I'm sure you know.
I'm sure.
But this one actually is not contradictory because you have different segments of the market. And if you think about certain segments of the market, we are seeing leverage get elevated. If I think about the broader group of investors, particularly retail investors, many of whom have sat out this rally, don't have enough in equities over the long term, yes, I would completely agree. That segment who has to save for an increasingly elongated retirement probably is underinvested.